Chris, very quickly, your thoughts, your desk thoughts on observing this squeeze. What do you think?
Yeah, well, listen, this is one of those times that it's great to be an unleveraged, long-only, stodgy old investor. You live for these times when prices deviate from fundamentals. There's a chance to sell stocks at artificially high prices and buy stocks more cheaply. So we're taking advantage. You saw this at the flash crash. You saw it a year ago. But you don't want these events happening too often because you really damage the integrity of the market. I know this is being painted as David versus Goliath, but I think it's important to note that David's got some muscle behind him. It's not just retail versus hedge fund. It's become hedge fund versus hedge fund.
Talked about that yesterday as well. Chris Marangi, what sectors of the market offer value after we saw the lift of the bottom as witnessed by banks here over the last quarter or two?
Yeah, obviously, fourth quarter, we finally saw a more sustainable rotation to value and small cap. Still think there's room to go there, as we get a better sense of the trajectory of the economy. A lot of those value names happen to be cyclical names, and small cap tends to be a little bit more cyclical. So we still see some value there. Probably going to see a pause in the near term, especially as we get perhaps some negative news flow around the variants. But ultimately, there's some bargains there.
Chris, can I just go back to GameStop? I mean, one thing that I feel is lost in the conversation is what happens to GameStop. I mean, this is a company. We can talk about futures and shorting and everything you want and all the options, but actually this is a company. Does it survive or not? Because if you look at the business model, it's not looking too hot.
Right. There was a reason it was highly shorted, obviously. Right. So I'm not an expert in GameStop by any means, but I think what I'd be looking for is them to actually raise capital at these levels. And we've seen some of the other companies do that, issue converts, issue stock, and basically give themselves the opportunity to remake themselves. So I think we all know how this is going to end. Much like COVID, we know how it's going to end. There's probably going to be a lot of pain for some people along the way, but it's probably going to end in tears for a lot of these retail investors and hedge funds.
Will it change the rules?
I think the system is doing what it's supposed to do. With the requirements for the clearinghouses and margin accounts and things like that. These are the breaks that are in the system. The new SEC chairman is going to have a lot of issues to look at, and I'm sure this will be high on the list, both on the retail side and on the hedge side. Is it right that hedge funds are, more than 100% short individual stocks? And should we look at bringing back the uptick rule?